The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, second time today. First hour was doing John Logan's show. John has a market show starting at 8. He kicks us off here at TFNN, 8 o'clock in the morning Eastern time. And what's really interesting, for such a difference, I don't think I've never done an 8 o'clock show. And Global Market Pulse covers a bunch of ground. John does a great show. Did my very best. Showed a couple of techniques, couple of techniques that use the type of methodology that John intimates and discusses on his show. And I'm looking at different points of resistance and support that are already notated automatically. They're generated via the MACD and the stochastic, etc. Let me just show you right here. And going to the ESU14, that's the E-minis. 1981.38 is the very strong resistance, and right now the high is 1980.75. So, and that's in the daily. In the 120-minute chart, we're already over 1979.45. And we'll see what happens, because there was tremendous support at 1971.68, and the low today so far is let me just check it out, 1973. So it hasn't got there, it didn't get to that low. So a couple of things going on here. Let me just go through this. The Dow is extended leg B. Besides being remarkable in the sense that there's a backdrop here of nothing. We're even waiting for the Fed. Dow's up 25 at 16,945. S&P's up $1.62. A little divergence there. Dow's up 0.15. S&P's up 0.08 at 1983.22. The Qs are up 0.02, up 0.01% at 98.72. So the Dow, in essence, is leading. That's a good sign, even though it's only 30 stocks. Just a good sign for me, because it means that we cannot get a peak B until tomorrow at the earliest. And it also means that we've extended the buy signal to buy mode that could go into early next week. I'm suspecting that we're going to get a top somewhere around the 17,151 high of the 17th. Might be a little under, might be a little over. That's what I'm thinking. And then we'll generate another pullback to the downside. Well, pullback obviously to the downside. Most importantly, let's just look at this. This is what I show my subscribers every day. Showed in great detail. In fact, look here is what I show. I do the overview. I discussed it, made a peak E. Well, it extended that, has extended that today. This is from yesterday's close. The VIX index was down at 12.21. I discussed what's going on under 12.10s. I said the market rallies, and right now it's at 12.01. I said over 1260, the market slides. I didn't do anything with the Trin index. I discussed that on John's show earlier about the inverse relationship that I had. It's just a very rare thing, which I did identify from Friday's low reading of the Richard Arms Trin index. I call it the Trin gauge, Chapman Wave Trin gauge for the way I use it. It's just basically his system that I use particular numbers that seem to work fine. And the Dow, as I say, is extended leg B in the daily, leg B in the S&P. So that's one of the things that I look at. I give all the different things to look at, discuss the dollar spiking higher, possibly, and then we're going to be looking a little closer at that, what the implication is there. Let's just go back to this chart here. This is the E-minis. E-mini right now is up 3.50, and what's happened is you made a cup formation. Now, I had no choice. I'm going to discuss this. Take a moment right now. Actually, you know what? The comp index is down just a fraction at 45.27. A little divergence here, a little digestive day that I was looking for. Gold is down too at 12.94. I just don't see anything gold right now. The silver's up 0.06 at 19.48. Now, high-grade copper, oh my goodness, the copper has moved up Whoa, 3.15. Let me just have a look at this. HGU 14. Yes, huge move in copper. And that's what I was showing in the 120-minute chart this morning. Oh, I even discussed it on the show early this morning. I said that if copper can break above 3.13, I think it was, 3.13, yes, it could push higher. And if it does, then the 200-period moving average in the 120-minute chart at 3.158 would be a target I'd expected to be done in hours. Within less than 2 hours, it did that. That is amazing. Good move, copper. Congratulations. So let's look at bonds. USU 14. Bonds are holding nicely. They're holding the 9-period exponential moving average. Everything about this chart says that it's probably a peak F that was made. But I won't say it's the case as an F/B. It comes back to an F/B. If bonds can go to, it's 139.21 seconds in the September contract. If that can move above 139.24 30 seconds, the high of the 19th, it'll be high of yesterday. That'll be very positive. And if it breaks down and goes under 139 and 10 seconds, definitely a peak F, and we're going to consolidate between 138 and 136 and a half. That should help the market for the next couple of days going into early next week. Now I'm watching the weekly chart of bonds real closely. Let me show you the continuous contract. The continuous contract. Let me just move this down a little bit so that I've got everything in place. Yeah, the continuous contract has this up channel. Wow, look at that. Almost hit it exactly. Isn't that interesting? Now it's in the mid channel. Let me just make that a dashed line. And the support, here we go. So the weekly parameters are strong resistance in the 140 to 141 area. Support has to be at 138.5, but a close underneath 137.5 says that bonds are coming down and yields are going high. It's just as simple as that. All right. In the meantime, back at the ranch, just a short-term pullback. We don't know yet about the weekly chart. We have to wait for Friday. So, yeah, dollar. This one's very interesting. Look, dollar spike. So the pattern that I was looking at was a peak E in the 120-minute chart, big spike up in the daily going to an alternate candle. I'm calling it D. And there's the leg, the body, the neck, and we might be making a head with a retest of 81.69 being very important. If there's a pullback, and then there could be a one-to-one with this doji candle right here. I think it's already done. If we go to the next candle. Yeah, if there's a break to the upside, 82.25 to 82.35 on the index would be the next level on the upside. What's really important is that the weekly is in leg C, and for the first time, we're looking at first time in absolute ages. When I say ages, I mean this is the first time since back over a year ago. A year ago. February, March, that big rally, February, March of a year ago, where the index went from 78.92 to that rogue wave peak F at 84.75. So this is one of the strongest moves we've had since then. Am I missing anything? Yes, the euro, EU, or USD. We're going to see if the bar that takes out the left side low bar. Can I do it this way? No, I can't. So this is a leg F/B to the downside in the daily, a leg B in the weekly, and we're going to see, it's already taken out. So we're going to see if the bar that took out the 1.32947 low of the week of the 8th of November is also the bar within 1 to 2 bars that pops back up, closing above 1.32947. And if it does that, the resistance is 1.342 to 1.345. My thinking right now is that it's going to be real tough to do that. Some exogenous event is going to have to do it over the next few days. So we've got money coming out of euro. Not a good omen for September, maybe? Question. Yeah. We're going to be watching this real closely. Should I do it now? No, I'm going to go to the first question, which is MUSA. Musa. Murphy USA. Leg C in the daily, in the monthly. Leg D in the weekly. And leg E in the daily. Fabulous move. IPO just a year ago, back in August of 2013, comes out at 38.49, hits that round number 41 high, goes to 36.25 low, takes off from there. And I don't know what they are, Murphy USA. Did I look this up the other day? I did, because it was a very interesting chart. I was expecting leg C in the monthly, and I never did anything for my subscribers. I'm upset about that. So let me just double check. Murphy, gas stations. All right, gas stations. Yep, that makes sense. Oh, Murphy gas stations. Okay. Well, it looks very good. Monthly should go to a D eventually. So this, if you're a long-term holder of this, it's acting beautifully. It's exactly what you want to see. As an IPO, it feels underpriced, and now it's gotten to fair value around about the 49 area. Then it gaps up. Now this whole gap is going to an extension, which says that at some point Murphy Oil at 53.92 will go a little higher, but it's going to come back between 51.50 and $49 and fill that gap at some point. But right now it's looking very good. So let's get out of that. And now I haven't looked at my notes for a few days, and I've been writing and writing and writing. It's amazing. I always forget to look down. Yeah, here we go. My Dow Quartet. What the heck is going on here? GE is acting just beautifully. How did it do that without me in it? I thought about it, and I said, yes, no, and then it makes leg D. I thought, leg D, you got to be a little careful in leg D. And what happens, it pulls back. The last time it gave an opportunity was 25.51 was the low on the 15th of August, and now it's 26.29. Leg D, weekly chart for the first time. This is a nice move. I haven't got any confirmation yet in the MACD, but the stochastic has turned from under 20% to over 20%. On balance volumes not acting well. The MACD has to do a lot of work to cross positive, but price-wise, it's above the 9-period exponential moving average. And in the monthly chart, this is exactly, look, here's the chart that we saw. Look at this. Keep your eye on this chart. Let me open it up. And let me open it like that. I don't like it when it's that big. I'm sorry. I can't see the patterns as well as I said. You see this H pattern in the Chapman methodology? This is a pattern that we call right there. The H pattern, they test the left side low. Eventually it can make a really big H that goes to a lowercase m. Have a look at this chart as we go into a break. See the GE chart? Have a look what happened to the GLD when it did the same thing. Where's the GLD? The GLD, as we go to the break, there it is. Remember, look at that. There's that same pattern. I'll be back. Basil Chapman, Tiger Conditions Hour, 2023.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I just did not finish with MUSA, which is Murphy Oil, trading 53.92 up 51 cents. I didn't give you the shorter-term downsides. Downside, the 9-period exponential moving average after making a leg E right now is 53.18. And if it takes that out, then it could trade a sideways here between the 52 level and 54.20, something like that, just for a little while it consolidates. But the MACD and stochastic are really strong in the daily chart, and I suspect it will take more than just one peak and a pullback to make a top. I think it'll make a little bumpy arch formation that might take into next week. So it's a little extended on the upside. Technicals are really good. The weekly chart is broken out with pretty good technicals, and the monthly is very strong in leg C and should go to D at some point. It doesn't have to be right away. So I thought I'd just cover that again. And I had an email question about, oops, if I can find it. The transportation index. IYT. Look at this. What a move up. This is leg B extending just like the general markets. Very strong leg A, just a minor pullback to give a peak A, and then boop, right up a double of the move that had already been formed to the upside. But it's still under 152.40, and we know this chart. It's the Chapman Wave Groucho Marx eyebrows chart. So let me just draw this for you. What happens is, yeah, these are very technical terms. You won't find them in many technical analysis compendiums. But in fact, if you get used to Chapman Wave, you get used to a lot of designations that have rather quirky headlines. So This is the left eyebrow, peak F in the weekly chart at 152.40. A sharp move down goes from 152.40 down to 142.47. 142.47. I would definitely call that an 8-point move to the ups. No, a 10-point move to the downside. Was that 142? Yeah, 10-point move to the downside. It's about 8%, let's say 7%, 8%. Now look what's happened. It's come all the way back. But the technicals are not very good. So there's a chance, and this is what I'm really looking for next week. There's a chance by next week that we form some kind of another short-term top, and that's the one that's going to be really important for the VIX, for the IBB, for the QQQ series, that's the Trust series, NASDAQ 100 trading vehicle, the IYT, and just a plethora of different chart formations, how the integrated oils do, how the you was looking at XLF is acting, because the XLF was showing some kind of under the radar strength, and so I haven't finished the IYT before I go to XLF. So what happens is, in this V-shaped formation, very quick down, very quick up, you go toward exactly to or just above the previous left side high, in this case 152.40, and that's where the price becomes the most vulnerable. So let's say we go to 152.82, somewhere around there, in the next few days. So we pull back a little bit, we go to leg C, 152, we pull back, and then suddenly you make leg D, and then leg D is in the 52 to 153s. And then out of the blue, you start to move to the downside. That says be very careful, because very often the V-shaped formation, this Groucho Marx eye, or Y Groucho Marx, well, look, you've got your eyebrows right there. That's the schnoz right there. Big bushy eyebrow left side, big bushy eyebrow right side. And then what happens is it pulls back, and it should hold. It's imperative that it holds some important candle or moving average. In this case, it's 147.70, the 9-period moving average. If the transports break under that, that'll be very, very negative, and say, it's going to test the low and it'll probably break the low of 142.47. Now, I've got an extended, almost, this is a huge vertical move in the monthly chart, and it's way up above the Chapman wave, 1-to-1 extension, which took you to that peak D, and then there wasn't a pullback. Yes, you got a peak at that point exactly, but it was a 1-bar peak at between 1-to-32 and 125, and then you broke out to the upside and you extended to leg E. NACD is still very good. Stochastic is very good. The monthly chart is not giving a single bit of information unless you study one or two of the indices very closely, the technical tools very closely. So back at the ranch, that's what I wanted to finish up with an IYT. We've got Dan in Baskin Ridge. Dan, before we go to the break, what did you want to look at?
At the IBB, whether that's a peak, forming a peak F in the daily.
Okay, we'll be back so far. Yep, very good question. I'll be back straight after this break. Dow's up 20. And we'll be back with Dan and Baskin Ridge looking at IBB.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're on with Dan and Baskin with New Jersey, and we're going to go straight there. So, Dan, the question is, what is the waveform count? And let me just show you a couple of things. If you're able to look at Tiger TV, I had an alternate count that said there was a peak C minus at 266.43. It was also the Chapman wave stork leg formation that went both using an instant restart as well as the other techniques that gave the leg, the body in the whole mid-June to third week of June, sideways move, then a breakout, and there was an alternate count using the high of the 20, if I can see that, the 4th of June, using that high as an instant restart. And what happened was, if you use that, you would get, where did A go to? Oh, there it is. So this is A. There it is. I just moved it while I was looking. So it went to a peak A, B, C, D, and that gave a top reading at 266.43 on the 3rd of July. It pulls back in a classic A to B. It's a Chapman wave expansion, parallel expansion, and goes down to 242.62. And then it started to move up. That looked like it was going to make that H pattern and failed. So I'm using that as the start of a brand new buy signal to buy mode in the weekly, in the daily chart, and that only got confirmed when it broke above the 30th of July high of 260.81, and it did that at 261.32 on the 14th of August. This is now still leg C, and now you can also see how everything's corresponding when I look at the Dow, the S&P, and the Qs all in leg. Let me just double check here, and the Qs in leg B to the upside. Has there been a new high today? 98.76, 98.77. So we've extended leg B. And that says to me, that kind of confirms for me the wave count in the IBB, which is the iShares NASDAQ Biotech ETF. So you had an F, you say?
Well, I was looking at the April 23rd is A.
Okay, yep.
May 29th is B. June.
Oh, wait, what happened to the May the 22nd at 236.28? Next day, 235.57.
Okay.
That
right.
was B. So that you remember, folks, in the and this applies to me as well. In the way that you look at the peaks and troughs, the most important, the only thing that counts in your analysis is not to forget or misrepresent any peak. You've got to go for every single peak, whether it's 1 penny or not. And it's easy to miss. That's all you have to. You have to scroll across, make absolutely sure. So that means you go to peak C in the daily chart on the 29th of May. Then you go to that potential instant restart on the 5th of June, and then there's barely a pullback. It goes 246.76, 246. 246.76, 246.69. So it's 7 cents less, but that was a peak. And that gave you E and then to F and a little bit of a pullback. But if you use that as an instant restart, it goes A, B, the big pink letters, A, B, C. I couldn't understand why everything about the chart, the unbalanced volume, the MACD, the stochastic, just the 9-period exponential moving average, the pullback from a doji candle, everything on the 20, on the, I keep saying 20, but it's the 3rd to the 7th of July, said that should be a peak of significance, and it was. So that gives me a peak D in the instant restart, perfect peak D, fits the whole scenario, pulls back, and now you've got A, B, and you're in leg C. And that would correspond, and the MACD has just given that little bump that says you should go a little bit higher based on the fact that it's at 95%, and the MACD is still, the stochastics are 95%, and the MACD is still expanding. And then if you go to the alternate count in the 120-minute chart, let me just do this, edit. So this is F/A, and then it goes G/B, and you can't go to ABCD of GH. You can't go to an H. Oops, I just typed in an H by mistake because I said it. You can't go to the H. It has to be a different letter, lower letter. And now you've got C. No matter what happens, it looks like this is a C, and this should go to a D. So the 120-minute chart is still active, very strong. And let me just show you something else. If you look at Gilead, really strong move up in the daily, a leg D in the daily. So it's a little bit more extended, but I'm calling it leg D. Leg C in the weekly, and that says, Gilead should still go even higher over the next couple of weeks. Leg E in the weekly, a monthly. But if you're looking at Celgene, CELG, trading up $1.58, this is leg B to match the other indices. Oops, is it A, B? Oops, I should have said C. So this is, there's your up arrow. So what I want you to do is just to confirm, if I go through some of the very important biotech stocks, you will see that they kind of concur that there's still internal strength. So that's Celgene, daily C, weekly D, monthly D. If you go to BIIB, Biogen IDEC, trading at It's down $1.90, trading at 343.86. That's struggling. This one is having a tough time making a little double top here, but it is a D in the weekly and a G/C in the monthly. So when you go through the different stocks, and what I said to subscribers this morning is that we've even got a divergence within the sectors. And if you're looking at the sectors, you'll find that some of the biotech stocks are not participating as well as others. And I'm just now grabbing Amgen, AMGN. That's in a leg B to the upside, and still with quite strong technicals. Yes, your question?
Yes, sir. On the weekly, because we're still under the peak of 270, on the weekly, if this closes below 266.43, what would that mean to you? If we close below 266.43 this week, would that make a difference to you?
Dan's got a really good question, because I have my whole thesis is based on going to higher peaks, but at a certain point, if you start a rally that is underneath a significant previous high, in this case you're talking about the weekly chart, and Dan says, what if we fail underneath 275.40, the high of the week of the 28th of February, and what I would say is that would be a very good chance of some kind of a double top, with a chance that we could just sneak slightly higher. But if the technicals start to give weaker readings that they did then we've got to be prepared that we could pull back. So the week is young, but so far Monday and Tuesday have gapped up. This is very unusual to see a gap in a weekly chart, but in fact we've gapped up, and the IBB is above the technique that I call the inside track. Let me just quickly explain that. In my CD introducing the Chapman wave methodology, I'm just going to go again. I'm going to type in inside track, INSIDE, and track. Now press enter. And then what you will see is on this chart here, this is a chart of Citibank way back when it was in the 40s. And this shows you there's a channel, and within that there's a little dashed line red and a little dashed line green. Let me go to another one which might be a little clearer. Give me 1 sec. Oh, there it is. Oh, here's the one. Here's deer. Up in the 70s, 60s to 70s. You see there's a pattern that says every time it gets to that area, that trend line, it reverses, and that little trend line is at 316. It's just a little tiny, narrow up channel within the up channel, and here's the up channel base that says every time you get into this area, it has become support, except when it finally broke down. So here's the question. This inside track, we've gone above it. That is, in essence, a really good thing, but we've got until Friday at 4. That's a long time to go. It's 2.5 days. So if that's the case, what I have to say is, so far, the MACD is good, not great, but good. Stochastic's okay, not great, but good, because it's not above 80%. But the price has gone higher than that previous peak, so this is leg C. And there's a really good chance that it'll get close to testing 275.40. But what it is also suggesting is that we've got to look for that U-shaped pattern that says any test between 274 to 276, where that previous high was, has to be monitored really carefully. Why? Because if it breaks out significantly and this becomes a confirmed leg C, rather than when we get there, I'm going to have to put F/C. Now, it gets a little complicated for those who are used to the Chapman wave methodology. If there's been a pullback that doesn't take out the previous low bar that started the buy signal, it means there's a chance that you are still in the process of making higher highs based on the previous buy mode. If this was just a minor, doesn't matter the points, but a minor pullback within a larger up move. And therefore, the moment we go above 275.40, I'm liable to say, okay, now we've got F bringing in the old letter plus the new letter, which will perhaps be C. And now, if the technicals in the daily are still very strong and the weekly is good, I have to say, my bias is, and then I'm going to make a choice, is the bias to say it's an F and we're going to make a serious top, or is it a C and any pullback needs to be bought? Hey, that's a great question. So let me answer now succinctly. I won't know until we go above 20. If we do go above 275.40, whether the last pullback, which was a major pullback of about 22%, 275 down to 207, whether that was the big consolidation and that fund managers are absolutely correct in buying everything they can on any pullback because we are now in a new weekly bull market, or whether this is the coda to the previous one. And if you look at the monthly chart, the rule of a triangle, a symmetric triangle that comes to an apex, says that, well, it's a little bit more than symmetric. It's actually biased to the upside. It says you're usually taking a rest and are going to continue the trend that you were in this case, the up move, if, in fact, you break above the trend line, and we're trying to do that now in the monthly, and that would suggest that 275.40 is going to be broken, and that will give me the lettering G/C in the monthly chart. But the MACD and stochastic are suggesting that we are within 4 to 6 weeks of some pretty good pullback in the IBB. So I hope I've answered your question. It becomes a lot easier if by this time next week, Wednesday week, the IBB is underneath 260, somewhere in the 256 area. Then I can say to you, failure pattern, it looks like we're going to be going down sharply. But at this particular point, the strength in the recovery of these biotech stocks, I would not, it's like a freight train. I don't know if I want to stand in front of it right now. I think it's acting well on a daily basis, just a little bit toppy.
Right. No, I hear the strength and price movement, but not in the volume.
Well, you see, because this is the skeptical rally window. Now, my fund managers are saying, "Oh, great! I'm so thrilled I bought this because it's going higher." But you're not getting the full conviction that you got before. This is part of the. This is part of it. This is really part of a period of divestiture where I think that a lot of the volume, the lack of volume that you're looking at over the past couple of months in the summer is not just the usual doldrums of the summer, but it's also a lot of the big moves have been made, and now a lot of people are very nervous. Do we want to give back the gains? So my suspicion is that they've started going back into the IBB over the past 3 months, but they've gone back tentatively, and every time they pull back, they put a little bit more in, but they are not fully loaded in the biotechs. So I think that's the reason why the volume is not there, but price is the arbiter of a trend as far as I'm concerned, and the price is very strong. This leg B, why did I call it C? It should be leg B. Oh, I think, let me just do this in the daily. I hate to give incorrect notations. Oh, it is leg C. Leg C, that was a gray A. Yeah, this is leg C, and it's gone to a new recovery high above the previous C. Now, this could even be considered, I don't want to mix things up. This is leg C in the daily. Looks good. There's a trend line that says somewhere in the 271.60 area, that's where we're going to see whether or not there's enough power to decisively break to new all-time highs, or that's where it starts the stalling process.
Thank you.
I hope that helps you, Dan.
It does. Thank you so much.
And those are very good questions, and I hope I answered them clearly. If anyone has a question as to some part of what I was discussing, please just email me. I'd like to be as clear as possible, but I'm trying to give a big lesson here at the same time as doing the analysis. There's the break. We'll be right back. Don't forget, Larry Presidente comes on straight after me. Should be a wonderful show with Larry, as always. We've got a program all the way through. Check the Tiger Dollars 40% discount. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Basil Chapman, last segment of the show. We're going to go straight to John in New York. John, how are you?
Okay, Basil. I was looking at Laredo Petroleum, LPI. It hit 2265, which was the weekly low, high volume low.
So I have a question. Well, I have a question for you, and the question is this a chart you just came across? Have you already looked at this for a long time and been waiting patiently for it to come back to test the low of January, the week of January the 17th, 2014 of 2282? How does that fit into, or was it just by chance you saw this?
I've been watching it. I bought it at a higher price, and I'm trying to average down the price. I think, is this a successful retest?
Okay, so I'm going to talk to two issues. They're completely separate. If you just called me and said, here's a stock that is trading at 22.85. It's called Laredo Petroleum, I guess, Inc., and it's 22.85. It's down 28 cents, and it is testing the 200-period moving average, just broke under it, of 23.73 in the weekly. It has this M failure pattern in the weekly, and the monthly chart, it's kind of an IPO. It only came out back in 2011, and it's had a whippy kind of action between 16 and 34, and now it's trading at the low of the recent range. Would you recommend nibbling here because there's a chance of a bounce? My immediate answer would be to say, I don't like this action one bit, but as a bounce, if this is exactly the bar, it's good. Your eye is good because it picked out exactly the one bar that has the chance now, but it has to do it almost by the end of the day into tomorrow to bounce. And all that what I would expect is it goes from 22.85 to 23.95. But I'm going to take the rest of the show before we go to Larry Pesavento to say to you, your first loss is your best loss. When you go underwater very soon after you buy, and let's just say you were anticipating a bounce. Instead of a bounce, it went down. Now, the short-term trade for a 5%, 7% gain has turned into a loss. This is a psychologically completely different thing. So I'm going to do two things with you. I'm going to suggest that you don't do any trading on this stock because that wasn't your plan. If your plan was to scale in at 26.50 and then say, wow, if it gets to 22.50 or 22.80, I want another. And if it gets down to 17.60, I want another, because my eye and my experience says this is going back to 31. That is completely different. Right now, what you're trying to do is to make up a loss. And the trading gods, lowercase t, lowercase g, are sitting there saying, hey, come on, John, you buy it, and we're going to show you what real pain is. So I'm going to make the suggestion that you hold off anything that has to do with risk. I would much rather see that it holds the low of the day, 22.65, and it closes somewhere around 23. And I'm going to ask are you able to call me tomorrow, Thursday?
Sure.
Okay. I'm going to ask my engineer if that's okay, because we usually don't take two calls in a row. But I want to do that because I want to take a little time to discuss with you the psychology between trying to buy lower to get even or to make an even bigger killing, or being killed. The whole psychological thing, it's very bad for your trading because it impacts all your other positions, because it's sitting there waving its finger at you saying, no, you made a big mistake. So let me do this. I'm going to say, hold off for today, even if it bounces by the end of the day. I want to talk to you a little bit about a trading plan that says this is what you might want to do, and I'm asking if you're able to call me tomorrow in my show at 11 o'clock, and we'll take a little time. A lot of people often do this sort of thing. I've stopped doing it a long time ago. It really hurts. Will you do that, John?
Yes, thank you.
Thank you very much for calling. We'll be back tomorrow with John. Thanks for being here. Stay tuned for Larry Pesavento and program.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.